Recently posted content. Last week, we posted the strategies for 3% monthly profit, part one, move with the markets. That was based on a question of Max. Part two is about 75% done. There's a couple things I wanted to also show in the testing. Part two is going to be called the conservative income strategies. I also had a coaching session regarding that on Thursday. So that's going to be coming soon. I was hoping to have it done before today and posted, actually. It just didn't happen this week. So we'll get to that, and we'll get that to you promptly. Searching for shorter-term calendar spreads, discussing using the market sentiment tool for adjusting or placing trades, and that was also illustrated in part one of strategies for 3% monthly profit, ? Married put discussion, with income method is the best income method and most used. Stock is down, earnings coming up, how to manage, and a strategy discussion for SPY and QQQ. A little bit on out of the money strangle and other approaches investors are using just to follow those two broad-based indexes. Of course, I want to remind you that if you're just getting started in options trading, or you're looking to get into a new strategy, maybe you've been doing covered calls and cash secured naked puts, and you want to know more about credit spreads or debit spreads or maybe calendar spreads, go to our YouTube channel and check out the playlists. We have playlists for about a dozen or so of the different strategies, and each section, each playlist has about 9 or 10 videos in it where we walk through introduction of the strategy, criteria discussion that we use for identifying new positions in the strategy, the tools to use on power options, comparisons of different structures in the strategy and also to other trades, and of course, how to manage a winning trade in your strategy. Most importantly, how to manage a losing trade in that particular strategy as well. So there's a lot of information there that you can get to. The first part of Max's questions related to the portfolio strategies and so forth, essentially is asking what strategies and capital allotment to each strategy and position sizing give you the optimal risk. I know this is in a dozen webinars in different, probably 3 dozen webinars in different places. But as I've always said, for me personally, there's no way to answer this question because everyone has a different risk-reward tolerance. What you're seeing here is essentially mine, minus one little other thing that would be here. But 50 to 60% of my portfolio, which has been since probably 2009, 2010, is going to be in the conservative income strategies, which we're going to talk about in part 2 of that other series. And for me, it's mostly married puts and long collars, but other investors choose to use out of the money naked puts, in the money covered calls or covered call combinations, which require stock purchase. So that's why it needs to be a larger portion of the portfolio. Am I saying that a cash secured naked put that might only give a 1-2% yield per month is better than a bull put credit spread, which might offer a 15%, 17% return every 2 weeks? What I'm saying is that if I'm in a bull put credit spread that's out of the money with a high probability, and I'm in an out of the money naked put with a high probability, if the market turns and my stock falls 7 or 8%, I might be at a 50 to 100% loss on the bull put credit spread. I might only be at a 2 or 3% loss here on the naked put. Because I was cash secured, I had to put up the full amount. The lie of leverage works in both directions. But that being said, 50 to 60 would be in those conservative income strategies. So this would be 50 to 60%. 10 to 15%, as you heard me mention, would be in credit spreads, debit spreads, something leveraged, but I'm using a smaller portion of the portfolio because I know at some time over the course of a 1 or 2 year period, a debit spread or credit spread portfolio is going to be down 50%. We showed that last week in that first section, that sudden unexpected move from the Powell comments from 6.9 to 6.13. We had the bullish buy signal and we were in bull put credit spreads. We had taken $10,000 up to about $40,000 going bull to bear with the market sentiment indicators. That's not what we actually did. It's pretty close to what I did. But I was using bear put debits actually in my portfolio with some bull put credits, but I didn't do that many bull put credits this year. I've done a total of 12 now, 12 or 13. In any case, that portfolio value that we had at the beginning of the trades that were opened in bull puts before June 9th, by the end of June 13th, when the triggers were hit, it had lost about 50% of what it had gained. It was still profitable, but it had given up about $10,000, $15,000 of profit because of that move. That's why it only represents 10 to 15% of the total portfolio. I might personally have 5 to 10% in calendars. And then right now I'm using 2 to 3% in a broad market hedge or protection. Currently, my broad market hedge is the out of the money strangle on SPY, which again, we've been following the market sentiment. We don't have a full write up on that because it's just something I'm playing with. I probably would have had higher profits, Max, following the same rules or following the same approach with the market sentiment tool if I had maybe just bought calls and puts. But the market was so tenuous and was so strange, and was doing things that I haven't seen in a long, long time. So I wanted to be in the strangle position to profit in both directions, even though I knew I'd hopefully be wrong on one completely, and the gains on the other side would outpace that loss, which has been happening with these strange movements we've seen in 2022. That's me. That's what works for me, my targets and my risk tolerance. Those are not likely your targets. You might have a different risk tolerance. Ernie, who's essentially retired, still gets a paycheck from Power Options and still works every day for Power Options as well. But, he's in his upper 70s. So closer to him is about 70 to 80% of his portfolio. And this is what he recommends to investors who are retired, who call up for coaching sessions. But somewhere 75, 80% of his portfolio is in the married put and collar positions. And then maybe another 5 to 10% in debit spreads or long calls. And then, of course, maybe another 2 to 3% in, he's actually doing some calendar puts. He did calendar puts for a while. I think he's back into calendar calls. I'm not sure. I didn't ask him that today. I didn't get a chance to. But it's a different structure because of where he is. And his goal now is more protecting everything that he's earned and everything that he's built over the years in investing. I can take a few more chances. Some investors, of course, aren't going to use the married puts. That's fine. It's what we advocate, but you don't have to. And they'll just be doing, as I mentioned, out of the money naked puts with some long calls, some long puts, maybe some long strangles, and they don't even touch credit spreads. That's what matches their goals and tolerance. A couple of weeks ago, one of our regular attendees, one of our favorite and regular attendees, Chuck, I believe he said he was 80% or 75% in credit spreads. And he uses different market timing tools that he subscribes to. And he bases his movements and the positions he opens on those criteria. That's a little bit risky for my blood, even though I'm on the computer all day, because most of the time I'm handling phone calls and doing other things in those cases. So I have my alerts set on my positions. I have my triggers set and everything. But I don't always have the time to jump in and make a trade. And sometime with weekly credit spreads or 2-week out credit spreads, you need to react very quickly. So that's a whole nother concept to why the married put idea and the deep in the money covered calls as a conservative income strategy or deep out of the money naked puts appeal to investors longer term, simply because it doesn't need as much management. They don't need to be there at their computer. They're not day trading. Now, Max's precedent to all of this, when he asked his first question last week about the 3% profit, is that assume a full-time options trader. And that can go a different way. I would say that I am regularly trading options, but I'm not going to call myself a full-time options trader. I'm a full-time options educator that's a regular options trader. So there's a subtle difference there from what you were talking about. But I just wanted to give some clarification on that. So now I know where to find the video and discuss what I do in my portfolio, why it might not be what you want to do in your portfolio, why Ernie's is different, and why every investor has a different structure that they use based on their target goals, their risk tolerance, and what they're looking to achieve. Now, am I going to say that I'm making the 3% per month, Max, that you asked for? And most of this is going to be included in that second presentation that's not finished yet, of course, part 2. I'm not going to say that I do that every month. Some months it's been more, some months it's been less. Am I usually about 1 to 1.5% per month? Yes. And that was about 53% or so, or a little bit more, that our target audience answered last week during the poll of what are their expectations in realized gains. Yeah, of course, 2008, when the market declined, I was mostly in married puts, and I was down about 1% because of the married put structure. So that was something that allowed me to stay in the game longer and not have to rebuild. And a lot of people rebuilt quickly what they lost in 2008 in the next couple of years. But you know what I mean? That's why I like the protection in place, so that I don't have to worry about it and can still achieve the goals that I want. that today's material are my thoughts on your questions designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or direct trading suggestions. Options, of course, do involve risk, as we've seen numerous times, and may not be suitable for all investors. We had a chance to go through the search. We had a chance to go through the back testing tools. We just took a quick look at the portfolio and some rollout opportunities, although we were looking for a column for Fernando that I was pretty sure was there in that section. We didn't really go through, but for all strategies you're tracking, you can usually go to that position analysis view and see some rollout opportunities as well. But remember, you can take a 14-day free trial at any time to Power Options. Just go to powerop.com, put in your name and email address, no credit card required, and full use of the site for 14 days. As we discussed earlier for John, after that, the levels of subscriptions, $45 per month for the end-of-day data service. With the delayed service, you get updates every 15 minutes or so on the data, plus the picks of the day access, and you can request to have your created searches emailed to you rather than accessing the search tool. You can pick a time during the day to have your saved searches emailed to you. The historical service, just $35 more, gives you everything on delayed. And just for $35 more, you get full access to the historical data and backtesting tools, which we used a little bit for our January straddles and strangles we looked at. And of course, the real-time service, every time you run a search or refresh your portfolio, you're getting the numbers and the calculations at that very instant. The premium service includes everything. As talked about for John, you can upgrade at any time or downgrade at any time. Free coaching is available on all levels of subscription. No contractual obligation. You can cancel at any time as well. More education, of course. We talked about the playlist. We talked about the videos that are available. You can check that out on YouTube, but also many of those are also available right on Power Options on your trial or as a subscriber. Just click the free webinar tabs underneath the main home tab, and they're organized by topics: Power Options tools, options strategy discussion, options concepts discussion, and requested topics, where we're putting the full hour and a half presentation of our Friday series up for our subscribers. Only subscriber access there for the full presentation that's posted on Friday as well. I'm sorry. By about 7:30, that'll be posted there for subscribers. But then, as always, we'll crop these and send them out to you. Now, if you think of any other questions at any time, send us an email to support@powerop.com or support@radioactivetrading.com. You can also call us during market hours at 302-992-7971. And trial members and subscribers, remember, you can schedule a free coaching session at any time.